It's really pretty simple. If you take a look back before the global financial crisis in 2008, most people would just go to their bank to get a loan. The banks had huge balance sheets. They could price things at a very efficient manner. So no one really thought of anything other than going to their banks. The problem is there are a lot of issues that were being created, and this ultimately goes all the way back to the 1980s when you had BCCI go bankrupt. It's changed the way regulators thought about banking. Okay. And rather than keep things very simple in terms of how bank capital was calculated, things got more complicated. Banks actually had to assess the risk associated with the loan and how much they had to charge on the loan, rather than effectively saying all the risk was the same across every type of loan. So you could have a shipping loan, you could have a first mortgage loan on a home, and everything was treated the exact same. That, to a certain extent, is what led to a lot of the problems during the global financial crisis. As a result, the banks started to have to hold more capital, price the loans relative to the level of risk that they were taking, and in that, what is deemed to be the riskiest loans by the regulators, the banks just aren't efficient in terms of how they can price those loans anymore. As a result, you had private credit really start to grow much more effectively in that marketplace as they came in and they could price relative to the economic risk, not to the regulatory risk associated with those assets. So these non-bank lenders can come in and fill this gap that exists within the marketplace and provide that capacity to those borrowers that still want to take that type of loan out, but cannot go and get that loan effectively from their bank. Now, when you take a look at what we do, it is just one small subsector of private credit.
We are a subsector that specifically focuses on real estate.
Correct. And when you take a look at the non-banks, the definition is pretty broad when you look at it. So insurance companies, pension funds, high net worth individuals, anyone who is not a bank can come in and provide that capacity to lend money, but they need someone to actually do the work for them. So what they do is they come to us and they give us an allocation of their funds because we have the processes, the procedures, the contacts, the origination platform, where we can originate that business effectively and provide them a return which is sufficient for what they need to meet their liabilities.